Good evening, YouTube. Welcome to another episode of the Sir Thrival Investing Channel. I am your host, Sir Thrival, and I'm here today to talk about how we're going to Sir Thrive in the stock market. Please hit that like and subscribe button. Please hit that like and subscribe button before I begin. Today, I wanted to give you guys an update on NIO as we head into another week and give you guys an outlook on what we can expect with NIO for the next 5 days. As you may have followed in the market so far, NIO has had a price reduction. It has, seen its shares sold off, over the last couple of months, all the way from February all the way up until now, pretty much. NIO has seen a steep decline in its share value, and this has a lot to do with the overall market, and it has a lot to do with what's been happening with the growth sector. The growth sector is the stocks that have been overpriced. They have a higher valuation than they really should have, and it's really because the valuation is pricing in the future. It's pricing in what the company is expected to do in the next 3 to 5 years. So NIO is one of those companies that has a valuation that doesn't necessarily reflect what it's currently capable of providing, in terms of actual services. But I don't want to belabor the point on that. What I really want to talk to you guys about is what we can expect with the price moving forward. And according to Forbes, this article by Forbes, it's questioning whether or not NIO stock has bottomed out. Now, for those of you who listened to my video that I posted a few weeks back about NIO hitting $30 a share, NIO did go down to $30 per share. And that was a buying opportunity for me. It was a red day. It was a red week, actually, when that happened. And I took that as an opportunity to buy more NIO shares and average down. And last week, NIO saw a little bit of a comeback. I think it finished last week at about $34 a share. And heading into this week, what can we expect? Now, according to the article, NIO stock remains down by over 35% year to date, and by close to 50% from all-time highs seen in February. So basically, back in February, NIO was trading for about $60 per share. And this week, it's sitting at $34 a share. So we saw a 50% price reduction. The sell-off is driven by the ongoing semiconductor shortage, which is limiting production in the auto industry, higher electronic vehicle competition in China, and fears that rising inflation will lead to higher interest rates, which is causing investors to rotate out of highly valued growth stocks. Well, the semiconductor shortage has a lot to do with COVID. When the COVID-19 pandemic started, semiconductor plants were shut down. And then once, the restrictions started to loosen up, they reopened the semiconductor factories, but, they had to deal with a backlog. They had to keep up with the growing demand. And this is affecting, the technology industry, from video game consoles to cars, any type of device that uses a semiconductor is going to be impacted by the semiconductor shortage. And NIO is definitely going to be impacted by it because they're not going to be able to deliver as many cars, produce as many cars, because they have to get these semiconductors. And it's going to take some time to get these semiconductors. So with that being said, this is going to affect the valuation moving forward. So the article goes on to say, however, we think that NIO stock is likely bottoming at current levels of about $33 per share for a couple of reasons. The current chip shortage is likely only a transitory factor, although NIO's deliveries fell by 2% month over month to 7,102 vehicles in April 2021, with sequential growth for May also likely to be limited. NIO recently indicated that the chip situation could get better around June or July. This means that delivery growth should pick up over the second half of the year, likely improving sentiment around the stock. Okay, so with that being said, it looks like the semiconductor issue could be resolved by the end of the summer, which means by fourth quarter 2021, we could see a revival in NIO. We could see NIO return to its highs of last year. With that being said, buying NIO at $33 per share could be a good idea moving forward. All right? It could be a good idea. I, for one, believe it is a good idea. I'm holding NIO for the long term. I'm holding NIO for the next 3 to 5 years. I think that NIO is going to outperform the market. I think that NIO is going to recover. And I think that right now this is a buying opportunity. But I'm not telling you what to do. I'm telling you what I'm going to do. So right now I have some money in my buying power. I'm going to be keeping a close eye on NIO. If NIO drops below $33 per share, maybe to $32, $31, I'll start nibbling and buying a few shares here and there to continue to grow my position. I do believe that, next week is going to be a good week for NIO. I don't anticipate a sell-off. I don't anticipate NIO going down to $28 or anything crazy like that. There may be some volatility. I predict that Monday and Tuesday will be green, and then Wednesday will be down, and Thursday will be kind of like flat, and then Friday we're going to have a better day. So I think next week's going to be good for the EV sector. So with that being said, guys, check out this article by Forbes. Has NIO stock bottomed out? To give you guys an idea of what we can prepare for. And good luck out there in the market, guys. And this concludes another episode of the Sir Thrival Investing Channel. Please follow me along for the journey and hit that like and subscribe button, and I'll see you again next time.